Does the presidential election actually matter?
Ooh, if tariffs go to 60%, we've already seen China, since he put the first tariffs in place, lose 40% of their exports to America. We all know some companies dump product. He's going to go after those kinds of people much harder. I mean, there's people questioning whether legally in America that can be done.
The AUKUS agreement was like a really big geopolitical move. Do you think that will change for Australia with the Trump presidency?
Hero or sidekick?
Welcome to Sidekick. I'm Bryce, and I'm joined by my regular co-host Ren, and we are your trusty sidekicks. And boy, do we have a special episode for you today. Ren, good to be with you.
Bryce, good to be here. We are joined by Phil Mackintosh, Chief Economist and Senior Vice President at Nasdaq. Phil, welcome to Sidekick.
Hey, thanks for having me, guys.
Excited.
Now, the last few years, not the last few years, the last few decades almost, the US economy has been the global economy superpower. It has been the superpower for retail investors and investment portfolios around the world. It's just been a phenomenal story. A lot of the companies listed on the Nasdaq. But, you know, the US election has happened and all eyes are on the US, and we're here asking, will that superpower continue into the 2020s, you know, from here? What's going to come next?
Yeah.
And we've got you all the way from New York to
I
help
thought we were
us
going to
answer
talk
that.
about why the US got bigger, but straight into the election, huh?
No, yeah. Well, we don't want to dwell on the election, but that's kind of the context in which we
Yeah.
want to have this conversation. So, will the US superpower continue? And I guess let's start with the presidential election and go from there. And where we want to start is, does the presidential election actually matter? How much does it affect the economy? How much does it affect markets? Is there any signal amongst all the noise?
Really good question, because the reality is, if you look at historic returns, president by president by president, and you look at which party they were from, whether they were first term, second term, it doesn't matter.
Nice.
It doesn't
End of
matter.
podcast.
With one exception, because we had a look at the chart, George W. Bush's he
Two exceptions,
Yeah.
actually.
Okay.
The other one's Nixon. But the reason both of them had bad returns is not them, it's two recessions in their term.
exactly.
So in the 70s, you had the oil embargoes, and because of that, you had high inflation. So interest rates went up, just like we've just seen. That's kind of a headwind for stocks. It's bad for the economy. So that was Nixon's problem. Bush inherited the tech bubble bursting, and just before he left, we had the credit crisis, which I think you'd probably blame the Fed on before you'd blame it on Bush, because they had rates too long for too long, and then they came in and put rates up, and the US mortgagees all ended up with, they couldn't afford their mortgages, so they had the keys back, property crisis. Like, really, that had nothing to do with the policies or the presidency. It was the economy.
So are we starting this conversation and finishing it at the same time and saying
Everything from
it
here
doesn't matter?
it doesn't matter.
I mean, I think if you're an investor in single stocks, it's going to matter, mainly because Trump's got such distinct policies. Like, I mean, one of the things that was kind of interesting when he was throwing out all of his ideas is people started to realize, like, he's doing a lot of tax giveaways, but the tariffs are going to raise taxes. And so, we actually have like this fundamental shift in tax collection from income to tariffs. And so if you're, I think of this because I talk to corporates because I'm at Nasdaq, if you're a corporate with a supply chain that's bouncing around the world before it gets to America, you could have lots and lots of tariffs building up in your product before you get it to America, which might make it suddenly cost so much that you can't sell it anymore. So I think there's going to be winners and there's going to be losers depending how this whole tariff implementation sort of kicks out. I know because we've already had Trump 1.0 and he taxed or tariffed the Chinese economy. And so back then, there was corporates that were already trying to friendshore, onshore, whatever you call it, nearshore, with their manufacturing. So we had, moving production facilities to Vietnam or Mexico because at least the labor was still cheap. Maybe trying to do it in America, but you'd need a lot of robots so that you still had the cost base that was the same. But I met companies who were doing both. It's disruptive on the supply chain. But at the end, it was solvable. The companies worked it out.
So speaking of Trump's policies, he's had everything from immigration, tax rates, reducing regulation. You speak of tariffs. What do you think will be the most consequential if they do come to fruition from an economic point of view?
So if you look at everybody's forecasts, and that's a cool thing about being at Nasdaq, I get to see all the banks' forecasts, so I can kind of see what the average is. Generally, because he's going to increase the deficit, right? He's going to cut taxes more than he's going to increase tariff revenue collection. That's expansionary, so that's going to create demand. It's probably positive for GDP, at least in the short term. It might also create inflation just because of the demand part. But then the tariffs are going to be interesting. So 4 or 5 years later, when companies are trying to fix their supply chains, I think you're going to see more dispersion across winners and losers. But I think the tariffs are still the thing to focus on in terms of what's the biggest impact. The trouble with the tariff debate is we kind of feel, well, I think the general consensus is this is his opening gambit. It's not where we're going to end up. So 10% for everybody. I mean, there's people questioning whether legally in America that can be done. There's different rules that let the president do taxing without Congress approval, but it's for national security. So, like, I mean, is importing clothes national security risk? Like, probably not. What happened the first go round was technological products, right? And NVIDIA chips. We don't want them going to China. So, like, I think there's going to be limits on what he can do unless they have the sweep, right? Which is looking a little bit likely. So the House races are still not completely counted. So we don't quite know whether the Republicans are going to control the House, but they control the Senate. They obviously have the White House. If they get all three, it makes it easier to make law. So what I just talked about, how law stops him from doing blanket tariffs, goes away to a degree. The other thing that a lot of economists are talking about, though, is Trump loves looking at the stock market as his barometer of success. And so
he'll be loving it right now.
he probably is.
I'm just waiting for the speech where he comes out and says, record history, post-election.
And he hasn't even started yet. He'll probably take credit for the 20% that Biden had already this year as well. But,
crypto, he'll be like 90,000. Anyway.
So you mentioned there the Republican House and Senate, and we wanted to ask your view on does that change anything? Trump 1.0 from 2016, the Senate was tight. He had the Senate, but obviously McCain famously blocked the Obamacare repeal, and then the House was Democrat controlled, at least after the midterms. If it's a Republican sweep, which looks likely, do you think that will change the outlook and how his policies might roll out or affect the economy?
I mean, it probably just means more of what he said he was going to try and do will get done. A lot of people have also said, because he's had one go at this already, and I mean, COVID must have disrupted any plans that he actually had, because it did disrupt all of our lives. He's going to be better organized. He's already putting people into place that are much more aligned with his way of thinking in terms of the economy and businesses and how the world should work. So it's going to be a little bit nationalistic, and it's definitely going to be America first. The question is, how America first? I know some of the questions I've been getting lately is, if he's increasing the deficit this much, typically the Republicans have been kind of more conservative about deficit spending. Like, will that constrain how much tax giveaways we can give? How high the tariffs get, whether there's subsidies if you kill an industry accidentally with retaliatory tariffs. So it's going to be interesting to see how it plays out.
It will be,
It's a moving target right now.
So we want to turn to how this will affect the world and start here in Australia. What do you think it means for Australian investors and broadly the Australian economy?
Yeah, so I don't think Australia exports heaps to the US. I feel like if he's going to, because he is kind of a bilateral, negotiated at one at a time type guy. If you're exporting a bunch of stuff to him, especially if he's called people currency manipulators. We all know some companies dump product. I mean, there's World Trade Organization rules about that. He's going to go after those kinds of people much harder than people who have genuine relationships and are cooperative. So I think Australia is probably in the cooperative camp. So hopefully, we get a little bit of a lighter treatment, which means our supply chains don't have to change as much either. And I say our because I am Australian.
Yes.
Speaking as an Australian right now. Yes. But yeah, I think Australia is probably not going to be as badly affected like China if tariffs go to 60%. We've already seen China, since he put the first tariffs in place, lose 40% of their exports to America. So they've shrunk that much, nearly halved. And it happened at the start of Trump. It kept happening during Biden. So chances are, if he comes in with even higher tariffs, the exports of China to the US will shrink.
Well,
Wow.
let's hold on China, because I think it's important to put the China story in the context of the China tariffs in the context of what's going on more generally in China, which is a lot of economic weakness, really. We've seen multiple rounds of stimulus from the government. The latest round of stimulus was to try and almost bail out some of the local governments because of the amount of debt that they're carrying. There's obviously a lot of economic weakness in the property sector. Chinese residential real estate, the largest asset class in the world, and a lot of wealth tied up from the Chinese people in that, and a real wealth effect there that is being felt across the economy. Add to that 60 to 100% tariffs from Trump to one of the biggest consumers and one of their biggest export markets. Like, what is it going to mean for China, and how do those ripple effects come out and affect the rest of the world?
Yeah, and I think you missed another big factor in China, which is demographics, which is actually a global phenomenon, but like they've gone from one-child policy to two-child policy to three-child policy, and I think people have realized 2 kids is hard work, so they aren't actually having 2 and 3 kids yet. But the rest of the world's got the same problem. The birth rates at the moment are sub-replacement. So almost all of the continents in the world, with the exception of Africa, are expecting to see their population shrink, which also means less young kids, more old people, and that means less workers, more retirees. Like, I can see globally, the Western world especially, having trouble maintaining quality of life when there's less workers to make the GDP that we need to pay off all the debt that we're incurring right now around the Western world too. But China has an especially big problem. So the forecasts are for their population to come down 30-odd% by the end of the century. That's a lot less demand than they're used to when they're trying, to your point, to get their economy reduced to be able to pay off the housing debt that they've created and get growth back into their economy. So I think China has an interesting problem to solve itself. Having said that, they've been fantastic at building infrastructure and making their market technologically advanced and making it more efficient. I mean, I had a question recently about whether India could take over China, and I think one of the problems for India is just getting to having stability in electricity production. I mean, they've got good education system, English speaking, which is helpful, but being able to reliably manufacture stuff that's high quality, like the chips, you need to be super clean and very technically produced. I'm not sure India has built its infrastructure in a way that it could get to there, at least in the medium term. So it's kind of interesting looking at all of these countries together, and I think demographics is a bigger headwind to a lot of countries than we think of too.
Holding on China for a second, you mentioned that technology story, and we're seeing both Biden and Trump really supporting more and more restrictions on selling advanced technology to China. I think just this week, as we're recording, TSMC said they're now selling no more advanced chips to China after one of their chips was found in some Chinese technology. Trump's obviously going to only ratchet that up more and restrict what can be sold from the US or its allies to China. How do you see that affecting some of those big Chinese tech names, the Tencents, the Alibabas of the world?
Yeah, I mean, definitely the Chinese stock market's not performed great since all of this started either, has it? But is that local policy in China making it harder to grow your domestic business, or is it, to your point, like I just need the inputs that are high tech? I mean, I think China's done a pretty good job of looking at what the West has and copying it, or at least cloning it. And so they've got a pretty solid, they make a lot of the Apple iPhones, right? So they've kind of got the manufacturing base ready to go. They just have to retool it to another company. And you look at some of the phone companies they've got, they're already catching up pretty quickly. And I know, talking to American companies, a lot of the best scientists and technicians and engineers are coming out of China just because they've got a better education system for STEM than America does, and maybe a lot of the rest of the world too. So they've got the education in China. They've got the sort of manufacturing facilities all there. It's going to be hard to stop them, I think, if you're worried, or you're thinking that Trump could stop them from competing on a level playing field in that sense.
This series is brought to you by Superhero, the official superannuation and share trading partner of Hawthorn Football Club and the first ever official superannuation partner of the Sydney Swans.
Superhero is proud to be a premier partner of these two legendary AFL teams, bringing exciting new opportunities to our customers, such as exclusive giveaways, game day events, and unique content for all you Superhero footy fans.
To celebrate the partnership, Superhero is giving away 50 custom-made superhero Sharon footballs. You can find out more details and a link to join the giveaway in this episode's description. Terms and conditions apply.
Download the Superhero app now and take control of your financial future.
When it comes to Trump's approach to geopolitical issues, he's pretty strong on wars, doesn't think America should be in any wars, wants to stop the Ukraine war. What impact do you think that will have economically?
That's an interesting question. The humanitarian cost of the wars that we've seen the last couple of years or the last 20 years or the last 100 years, it's always sad to see it happening, isn't it? There's probably pros and cons. I'm sure Ukraine doesn't want to cede any territory, but at the same time, it would kind of be nice to get their populations all back to doing manufacturing of productive goods rather than military equipment. So that could really help just stabilize and let economies grow again in that region, although both those regions, I guess. So it'd be kind of good to see the wars finish from a humanitarian perspective, from an economic perspective. But I can't speak for the politics at play, and that's why these wars started in the first place.
Let's hold on geopolitics and try and bring it back to Australia because this might be an impossible question to answer at the moment, given there's so much uncertainty. But the AUKUS agreement, Australia, UK, and US, was like a really big geopolitical move for Australians. Maybe not as big in the American psyche. But do you have a view on where Trump and the people he's appointing to his cabinet sit on that agreement, and do you think that will change for Australia with the Trump presidency?
I haven't heard of it. I haven't heard him talk about it. Maybe that's the best news you can get.
Maybe, yeah.
He's got a lot of things to do.
Yeah. We pissed off the French when we told them we weren't going to buy their submarines and we were going to buy American instead. Hopefully Trump doesn't then walk back on that sale. We need submarines.
And again, right, if Australia is buying American technology and American military technology, that's good for American business. So I think he's going to love that.
Yeah.
That's a good thing in Australia's favour, even if there's other things that we export to the US. So it'll all play into the debate and the negotiation.
Australia has US intelligence at Pine Gap. It has US Marines in Darwin. We now have US long-range bombers up in the Northern Territory as well. Surely we can get some US submarines.
As long as you're paying for them, I think that's what's going to matter.
So Phil, with all of the potential changes that Trump can make, where do you think the biggest effects will be showing up in markets? We're here as investors trying to understand.
Yeah.
We said at the top it doesn't really matter, but if we want to be opportunistic about it, where do you think, which sectors, which asset classes do you think are going to really benefit from the potential changes it's going to bring?
Yeah, good question. I think anyone with a complicated supply chain is going to have to work out the tariff problems. So I guess the flip side of that is if you don't have a complicated supply chain, you're a local, small American business, you might actually be in a good shape. I guess banks may be in okay shape because stuff is kind of done locally. It's all financed. It's not like there is no container ships taking banking products to and fro. Telecommunications, I guess the chip part might be. But already, what Biden's been doing, building chip fabs around the US, is probably something that I think philosophically Trump would align with. It's reshoring. It's certifying up the U.S. supply chain of something that's actually potentially a military or nationalistic threat. So we have enough chips for everything we want to do. So things like that probably help companies that are making chips in America already. It's going to be interesting to see. Like healthcare is pretty domestic, I guess. So maybe they're less affected.
We're seeing crypto at the moment go through the roof. He said he wanted, He wanted the US to be the crypto capital of the world. So I think the regulation, I think people are excited that there might be a little less eyes on it from a regulatory point of view.
Yeah.
So I think,
and the American rule set has not evolved at all, which you could say is a good thing. But it's also a bad thing because in America, what's actually been happening is different companies trying to do different crypto things have been getting taken to court. And then you got to wait until the court decides whether what you're doing is a security or is it a future or is it a currency. And if it is, there's rules for currencies, there's rules for commodities, there's rules for futures. And if you broke one of them, then you get fined. So it'd be kind of nice to know what the playing field looks like for a lot of those companies.
Yes.
But we also know Trump's been very pro NFTs.
Yes,
he said he's going to be pro-crypto. So
Phil, I think the party line that you should be trotting out is there's Bitcoin listed. There's Bitcoin ETFs on the Nasdaq exchange. That's all
absolutely are. Thank you for reminding me.
The tariff conversation is interesting because, like, if I'm to reflect on the conversation we've had so far, there's like a lot of uncertainty. But I think if we think about if we compare like the likelihood of a policy being implemented multiplied by the potential effect of that policy, the most consequential is going to be tariffs at this point in time. And I'm interested to know if you've seen any analysis from any of the people you're speaking to, or maybe from Nasdaq itself, around whether they will actually lead to like big shifts in supply chains. And really, for me, it seems like the calculus is labor costs are lower overseas, but then there'll be like a 10% incremental cost to import it. And it's like, is that 10% going to be enough to actually offset the lower labor costs?
Yeah.
Like, have you seen any analysis?
That's exactly the math to think through. Right?
Yeah. So has anyone done that?
I've seen a couple of like very high level forecasts that when you look at them, I think what they're basically saying is if there's a bunch of imports into America, then they're going to be affected more.
Yeah.
And so maybe you get the elasticity wrong. Maybe the 10% should have been 15% if you really wanted to do like a dramatic shift in demand and supply. But what you're basically seeing is Asian countries, and probably not so much Australia, but other Asian countries export to the US a lot. So the tariffs will slow that down, which will slow those economies down because they will be exporting to us less.
Yeah.
But we did see in Trump 1.0, like what happened was people shifted. Maybe they sent their products down to Vietnam and then Vietnam exported them to the US. And so the products were still making their way to the US. But the supply chain changed.
The difference is going to be if it's like a 10% global tariff, there's no way you can nearshore. You can't go to Mexico or Vietnam if everyone's copying the 10%, which will be
But there will be retaliatory tariffs as well. So like you're not going to get away from the cost increases that tariffs are going to create. I think there's an inflation risk built in. And I think that's one of the reasons why the US 10-year has been going up lately. It's not the geopolitical risk. It's not. It's actually pricing in an inflation risk that we're not going to get to 3.13% long-term treasuries like we were hoping, like the Fed has said a couple of times, if we're going to have higher inflation because prices are going up because you're adding a tariff to everything you're selling. We might have more income because of the tax expansions and cuts, but we're also going to have higher price goods. So. It'll be interesting to see how the statisticians deal with it because, like Japan has had periods where they've increased sales tax and it's a one-off jump. So I wonder if people will just say, well, incomes are stronger and tariffs are higher, but net, like it kind of is in the wash. Let's ignore the tariff jump. But I think prices will still go up because of tariffs, and it's going to have to work its way through the system. To your point, probably companies are going to have to think through. Should I keep producing in whatever country just got tariffed? Is there a way I can do less in that country and more in some other country, or do I take that country out of the supply chain completely? It's going to affect those countries that export most obviously.
So Phil, to close out, how are Nasdaq experts suggesting that everyday investors should be positioning their portfolios?
I mean, it depends what the investor, like what their stage of life is, what their risk tolerance is. Like you guys know all that.
40-year time horizon.
What did Nasdaq say
QQQ
price should
ETF?
do?
I don't know. I mean, what's interesting is what's driving the market right now. So you could talk about the U.S. economy. What's driving the U.S. economy is retail spending. Like they got their stimmy checks, they got all their benefits, and then they saved money while they're stuck at home. But they've just been spending way over levels that they were at pre-COVID, which the rest of the world hasn't got to.
Yeah.
So the consumer is what's driving the economy in the U.S., especially in the services sector. But that's not what's driving the stock market.
No.
What's driving the stock market is artificial intelligence. So you look at the S&P 500 performance, you look at the earnings growth, so much of it is revenues. So it's good, it's real revenues, but it's growing because of spend on AI. whether it's buying NVIDIA's chips, whether it's buying cloud compute from Amazon and Microsoft, whether it's Tesla and Apple who are going to have AI in their products, like the Mag 7 stocks, a bunch of other stocks that are like Lam Research that are involved in designing chips and building chips are all doing great. And they're adding, like, their real revenue. So it's not a tech bubble problem, but there's a lot of spending going into the AI space right now, and it's creating real revenue growth. So I think at the moment, AI is the thing that's driving the stock market. I guess a few people have said, like, can that continue forever? And it probably is in one of those early stages where we don't quite know what AI is going to do to the economy yet. And the theory is it's going to make everything more productive. So it's going to create this productivity growth, which is going to be a good thing for all of our economies, because we just talked about how the demographics mean everyone's aging. So if the workforce is shrinking, but we can get AI to do things for us, we actually might be able to pay off all this debt. That's like a big picture good AI story. But in terms of the stock market, we're starting to see a broadening out now, where the S&P 500, like almost every sector, is seeing earnings growth, and it's increasing. So I think the earnings growth catching up from the bottom, and the growth of those Mag 7, the hyper growth of those companies and real revenues, is starting to come back down to earth in terms of the growth rates. So we're starting to see a broadening out, hopefully with rates coming down. If you look at small cap in the US, they are paying more interest as a percent of earnings before income and tax now than they have really at any point in the last 20, 30 years. So as rates come down, their margins should improve. Like, we should get a broadening of the whole return base, because earnings really are what drives stocks. So we want to get earnings growing. And so we don't want a recession. Soft landings are good, which we're so far still having. But you want to have companies with good earnings. So I think rates coming down is a good story. I think the AI spend is not going to go away, but maybe now we've got a lot of the models factored. We're just going to start seeing it getting used. So there'll still be spend on the cloud. There'll still be need for those chips. But maybe the rate of growth will start to slow down a little bit. So those companies will stay profitable, but the growth might shift to other sectors of the economy.
Nice. Well, Phil, I think that's a great place to end it. We started this conversation by saying, the US has been the superpower for so many investors' portfolios, and we wanted to know if it will continue. And I think how you just summed it up there, as long as these US companies continue innovating, as long as we continue to see earnings growth, that's going to be the real driver of the stock market and investors' portfolios going forward. So, long may it continue. But thank you for joining us today. If people want to read more of your work or follow you online, is there anywhere in particular they should be going?
Yeah, I mean, if you Google me and comma Nasdaq, you'll probably find the landing page to sign up to a blog that I write every week. And you'll get to see some of the stuff that we research. A lot of it's about what's going on in the US market, but it's a big market. Like you said, it's driving a lot of other things around the world too. So hopefully it's useful.
Well, that brings us to the end of this episode of Sidekick by Superhero. If you're interested to learn more about how to grow your wealth like a superhero, head to superhero.com.au/registration.
Subscribe to Sidekick wherever you're listening so you never miss an episode. And if you enjoyed this episode, leave a rating and review wherever you're listening. That's it from us, your trusty sidekicks. We'll be back uncovering more superpowers next episode. And Phil, thank you so much.
Thanks for having me, guys. It's been great fun.
Thanks, Phil.